Hi there, Nick Royer here. And just when we thought that this year's news really couldn't get any more stressful, I mean, we've had inflation, and then we have rising interest rates, and then we have product shortages. I was just trying to get a simple bottle of shampoo at the grocery store the other day, and the shelf was empty. All I saw were these little post-it notes that said, item not in stock due to product shortages from the manufacturer. So that's leaving me to use a bar of soap as a shampoo alternative. And so that's not a good thing. And now there's news all over about a recession. And that's what we're going to tackle this week, because it's one of those questions that we've been getting a lot on the radio show. What's a recession got to do with my retirement, and how could that affect me? Now, as a pre-retiree or a retiree, a lot of people are wondering, should I be concerned? 2022 has already brought with it, bear market. And the question we're getting a lot of is, are we in for more market decline? Should you sell now and protect the money that you have left? And now, before you make an impulsive or rash decision with your investments, it's important to really understand a couple things. Number one, you should probably know how markets have behaved during past recessions. And what I bet you didn't know is, and you'd probably be surprised to know that the markets have actually risen an average of 1% in the last 13 recessions that we've experienced since 1945. Not only that, but in the 12 to 24 months following 9 of those 13 recessions, market returns have been significantly positive. If you go back, remember the brief recession in 2020 because of the pandemic. The S&P 500 finished the year up. So I know what you're thinking though. Nick, how can that be? I've heard the news. I've heard the radio. They say everything is plummeting. Isn't that what's happening? Well, here's the truth. The stock market is what we call a leading indicator of where the economy might be headed. Knowing the markets are a leading indicator, it's important then to really kind of realize that if we are in a recession, the worst is over for the markets before it is for the economy. What does this mean for you, the investor, the retiree, the pre-retiree? It means that during a recession, investors should probably be more aggressive with their investments and take advantage of low prices and put yourself in a position to reap benefits of the rebound. As the saying goes, you buy low, you sell high. But I know that's easier said than done. I mean, how do we actually know when the market and the economy have bottomed out? Just look back at 2020. The pandemic hit, the stock market crashed 34% in 19 days. At the time, no one could know that we would have a rebound so strong as we had. Heck, we all thought that we were probably going to be dead. And we were uncertain. It was a scary time for our economy. So here's another question. How do we know if the recovery will be quick or slow? The last one was a quick recovery. Who knows if this is going to be quick or slow? We don't know. But there are strategies that you can employ to protect your assets in the event of a downturn and maximize your upside when that recovery does happen. That's where we come in. One of the jobs of a financial advisor is to help you develop the financial strategy that's right for you. That means checking out all of your goals and your objectives and then structuring a plan that maximizes your chances of reaching those goals. But the job doesn't end there. After you develop a plan, you need to stay with it. You need to ensure that you stick to it by staying focused on the long term. Don't focus on the days, because the days can be wildly up one day and down the next. Just think, you could have a week where on Monday it's down 400 points. Then Tuesday, it's down another 100 points. Then Wednesday, it's up 400 points. Then Thursday, it's up 300 points. Then Friday, it's down 100 points. And if you only paid attention to the day-to-day, you drive yourself nuts. But if you focused on the long term, you come to find out that with all those ups and downs, you still ended up for the week 100 points. The key point is this: you get to decide what you focus on. When it comes to retirement, it's not a marathon, it's not a sprint. Retirement can be 20 to 30 years. That means you have to focus on the long run. No one can predict what the market or the economy is going to do, But after doing this for 22 years myself, I can tell you that you have to be prepared for whatever might be thrown at you. How? By creating a plan that can weather both good and sour markets. A plan that is, in essence, recession-proof. A good plan really accounts not just for the good times, but also the bad times in our economy. And what that means is you have to have investments that are stable during market crisis and investments that can really take off and grow when the economy and the markets around us are stable. So we're going to have recessions. We're going to have market declines. These are things that we have to prepare for. And in the end, you have a choice on how to prepare for it. And if you ever need help doing that, just give us a call. Our team is here to help out. You can send us a question or you can send us an email and we can help get you to and through retirement. Of course, if you enjoyed this video, make sure that you're clicking the link below, or you can click the subscribe button. Don't forget to also check out nearly 100 podcasts that we have out there at the onthemoneyshow.com website. That's onthemoneyshow.com. Or you can check out more free content just by going to group10financial.com. That's group10financial.com. You can also type in group10, TEN, financial.com for a bunch of other great resources and information. And of course, you can always reach out to us as well, as our information is here below. But until then, there's scary times when we hear the word recession, and when you are in retirement, it's sometimes scary to be in retirement and hear the word recession. But just look at the big picture, look at the long run, not the day-to-days, and just don't forget, you get to decide what you focus on. So until then, we'll see you next time. Bye now.